Are you ready to buy a home this year? This is going to be your step-by-step guide to get started. Hi, my name is Rickelle Stockton. I am a mortgage lender with over 6 years experience helping potential home buyers just like you purchase a home. Today, we're going to talk about some of the most important aspects of buying a home, starting with credit. Did you know that when you look at your credit score on apps like Credit Karma or maybe the free banking app, the score that you see might not match the score that a lender like myself will see. And that is because we are using different scoring models. Typically, those online free apps are going to be showing you your FICO 8 or maybe even your Vantage score. Where mortgage lenders, we're more concerned with the FICO 2, 4, or 5. That's why it can be so confusing when you take a look at your credit score and maybe it shows a 740, but when you apply for a mortgage, the lender says you're only at a 720. If you are interested in seeing your score exactly the same as we would see your score, there is a way to do it. I recommend going to www.myfico.com. That way you know in advance where you actually lie. So what credit score do you actually need to purchase a home? Different loan types are going to have different requirements when it comes to credit score. VA, for instance, does not have a minimum credit score requirement, but most banks are going to require a minimum of 580. Whereas with FHA, you're going to need a minimum of a 580 if you want to put the minimum down. Now with conventional loans, you'll need a minimum of 620, but you'll notice that unless your score is over 700, you're going to receive a higher interest rate and probably more expensive mortgage insurance. Something important to remember is that each lender might have different credit score requirements. So if you're not approved due to credit score with one lender, you might want to check with another. This is also why I strongly urge that you reach out to a lender early in the process. The lender can tell you if there's items that you need to have paid off or if there's something on your credit report that might disqualify you for a loan program. And with there being so many loan options, you really want to make sure that your score is in line for the loan product that you're actually trying to use. I know a lot of people hesitate to reach out to a mortgage lender such as myself because they don't want the hard inquiry to affect their credit score. The good news is a hard inquiry typically only affects your credit score about 5 points and sometimes even less. A good lender is going to be able to give you a couple of tips when they review your credit report that could actually offset any loss in points you may have received. Another common misconception that sometimes can hold people back from wanting to go through the pre-approval process is they're afraid they have not been at their current employer long enough. While stable employment history is so important, it's not required for you to be at the same employer for the previous 2 years. Your time in college or even trade school or even at previous employers can count towards that 2-year requirement, especially if it's relatable to the job or the career that you're in now. Lastly, a lot of people believe that you need 20% down in order to purchase a home, but that's not always the case. Programs like VA and USDA allow for a 0% down payment in most cases. FHA loans start at 3.5%, and some conventional programs will allow as little as 3% down, while others require a minimum of 5%. But I want you to remember, buying a home is not just about the down payment. You need to take into consideration all the costs associated with purchasing a home, which also includes your closing costs. Closing costs are typically your appraisal fees, credit report, lender fees, title fees, property taxes, homeowners insurance, just to name a few. In my area, these costs typically run between 2 and 3% of the home's purchase price. The best way to budget for what you're actually going to need is to speak with a lender. That way you can avoid any type of surprises, and the sooner the better. A lender is going to be able to assess your specific scenario, count all of your qualifying income, and explain all the costs associated with the type of loan program you are using. So now let me give you a real life scenario about why getting pre-approved early is so crucial. Imagine 2 clients. We have client A and client B. Okay, so client A contacted me as soon as they decided they wanted to buy a home. We worked together and we were able to get their pre-approval done in just a few days. Client B, on the other hand, decided that they wanted to wait until they found a home that they loved before they would get pre-approved. They thought this was going to save them more time. Now, so I want you to picture this. It's Friday morning and a new home hits the market. Both client A and client B have fallen in love with the pictures they've seen online of this property. Client A, already pre-approved, was able to set up a showing to see the home, and they decided they wanted to put an offer in. We were able to send them a pre-approval letter, and their offer was submitted before end of day. Meanwhile, client B had not been pre-approved. When they tried to request a showing of the property, it was actually rejected. The seller was only allowing pre-approved buyers in the door. So of course, we tried to scramble to get them pre-approved. They did an application. They gave me some of their documentation, but we were missing a key piece, and that was their tax returns. They reached out to their accountant, and unfortunately their accountant was on vacation for another week. By the time we actually got them pre-approved, that house was already under contract with another buyer. This story highlights a simple truth. The early bird gets the worm, or in this case, the house. By getting pre-approved early in the process, you could ensure that you're ready to act fast when you do find that dream home. So let's talk about the cost of getting pre-approved. While some lenders may ask you to pay for your credit report, most of the time the pre-approval is going to be completely free. I do want you to be cautious. If you are filling out an application with a lender and they're requiring your credit card information to charge you a fee for a pre-approval, I want you to run. Once you have that pre-approval in hand, the fun part starts, and that's the house hunting. If you don't already have a real estate agent, ask your lender for recommendation. I personally work with some of the best in our area, and I can help connect you with somebody that understands your specific scenario and your needs and your budget. Listen, finding the right home can take some time, and that is perfectly okay. Don't rush into buying the home out of fear. It's a big decision, and it's crucial to move at a pace that works for you. If you're ever unsure or you have some questions, I'm always going to be here to help. If you're ready to start your home buying journey, you can contact me for a personalized consultation, or feel free to check out some of my other videos about credit and the home buying process.